Traders, welcome to Charts and Coffee. Great to see everyone. Happy Friday, everyone. It's an interesting couple of days that we've been dealing with. And in yesterday's free video, I threw an idea out there, which was just not to say it's up and away from here, but just to have a different set of eyes on what yesterday's move meant. And just to have a different opinion on not just lower lows, because look, we can go anywhere and find bearish, if not uber bearish commentary. And clearly, it's not a matter of ignoring that, but it's just a matter of making sure we have the other side of the argument still in our minds. One of the most effective things I ever noticed successful traders did, and I tried to adopt that as best I can, is I try to poke holes in my own analysis. So I'm not thinking about the long side really anymore. I'm thinking about how the short side could be right, because I have a lot of arguments in my mind using my tools for thinking that, yeah, we've sold off, but there's probably a pretty justified path to the upside as there is to the downside. And that the upside is the one that's being neglected. I hope that makes sense. And then I'm using volume, I'm using size to ask myself, on a day like yesterday, if I were to look back on the average volume within October, right? What's the average? Not a histogram that tells me what the volume was today. You'll notice I don't have that on any of my charts, but I do look at an average amount of volume for the month or for the past 21 days. And I just wanted to look at October, and I wanted to look at what the volume was on that up day. And yesterday's volume was just over 805,000. And I believe the average volume for October has been about, and this is in the S&P, by the way, and the average volume for October has been 756,000. So something Trish and I were sitting in the office yesterday saying, all right, what did yesterday say, and how many eyes, how much attention was on it? So just something to mention. All right, so with that being said, and volume labels, and yeah, the bots hit me up saying, hey, we have the volume labels. And on Monday, we'll talk, maybe on Sunday, when we have the Raghee report, we'll get into that. Yeah, we'll get into that. So somebody asked me, is the Raghee report a newsletter? No, gang, it's a show that we do on Sunday at 6 p.m. for 30 minutes. We take a look, prepare for the week ahead, and of course, take your questions. And Sunday is 6 p.m. Eastern. And we'll do that this Sunday as well. All right, gang. So as always, phone lines are open for your requests. Let's take a look at what we have going on in this market. And a lot of you that are looking at, as well as myself, looking at, is this the confirmation of a minor low? Gang, remember, it still is a downtrend. Please remember, this is still very much a downtrend. And the one narrative that I am keeping in mind that is bearish to me is not a crash scenario, is not a huge down scenario, it's not a gap down, unless something geopolitical happens, which, let's face it, we seem to always be on the razor's edge of that. But barring anything that is impossible to time, right? We know there may be a catalyst, but we don't know when it could happen. So barring that, the most dangerous path to the downside would be new low, about a 38.2% retracement, even as shallow as, say, 23. But I think we're going to continue to see Fibonacci, if we're going to go to the downside, a bounce to about 382 to maybe 618. That's your 382 Fibonacci, 50%, and the golden mean, and then a new low, and then another retracement, and then a new low. That's not always how downtrends work, but that would be a very steady, if not slightly boring, path. That would likely burn the most traders, because every time we go down to sort of a calm low, it will entice buyers. A little bit of a bounce, we run out of buyers after retracement. And that's one of the paths to the downside we're going to talk about on Sunday. So it's not as if I'm not without that. I still just don't believe crash and collapses are imminent. So always two arguments, both sides of the argument. All right, so let's take our first question. And up first is Prince, who asks, I'm a beginner. Some days I feel like I am too, my friend. Uh, 30 some odd years in, and I thought, I've seen it all. No, I haven't. So I hear you. Practicing the setups on the sim with no actual risk. You know, I think what's really cool about a sim, and the best thing about any sim time, is getting really fluent with order entry and getting comfortable with that's your communication device to the market. So it's good time to get proficient on the platform. That being said, in my opinion, where's the line between over trading and getting exposure to the market environment? Um, well, over trading is entering without a setup. That's really it. If someone has an active setup and they're trading on a tick chart, the amount of trading is very much related to the interval that you're trading. So there's no magical level of over trading. It's really, are you trading using a valid setup? And if you do that, you will naturally see you're not going to overtrade, because the mandate of the setup being there is always going to hopefully prevent us from making those mistakes. As far as exposure to the market environment, again, is there a setup that justifies that at the current price level, we can control risk and expect follow through? I mean, that's all that a setup is. Two things, really. Notice I didn't say going to our target, I want some follow through, but can we control risk and get some follow through? That's a setup. And as far as putting in 10,000 hours, I think I posted this either on my Twitter or on my Insta. It's never been 10,000 hours, although I get the gist of it. Here it is. And Bruce Lee said it. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. Now, I realize in that example, we could have spent 10,000 hours doing either. So it's not a matter of 10,000 hours on 10,000 topics, which is sadly what most people do. It's 10,000 hours, it's 10,000 iterations on a very finite number of things. That's where mastery comes from. And it's not the hours, it's the repetitions. It's the reps. It's always the reps. All right. Thank you for the question. Next up is, what do I think about DWEC? All right, let's take a look. Sub $20 stock. Downtrend. I believe that digital world is likely to continue to head lower. If I were looking to be a buyer at some point, I'd want to see a volume ledge. I'd want to see a market that is going into a neutral environment. If not, the path of least resistance does seem to be heading lower. All right, PP Family asks, totally confused on what happened yesterday. Kindly help to understand what happened. PP, take a look at yesterday's video. If you haven't checked out that free video, that's exactly what I sat down, tried to clear. Look, all of us on this side of the mic have so many ideas going on, as well as you all, like all these different things that are going on. And then sometimes it's easy to talk it out loud. This is what Charts and Coffee is. And I don't know that there's just one explanation. But yesterday, I sat down and I must have chewed Trisha's ear off here for a good hour before I really started to put some ideas together as far as what's happening at these levels. And so check that video out. I mean, in the most basic sense, it was just more buying support than selling pressure, but that doesn't really answer the question, does it? Yesterday's candle, remember, momentum can beget more momentum. We don't always need a really good reason to do something. However, at some point, it's a feeding frenzy. Anytime we have a short squeeze, anytime we have a sell-off, it is a feeding frenzy at some point. At some point, people are jumping in, traders are jumping in, and they have no idea why, but they're seeing everybody else do it. I mean, that's, as much as we want to think trading is this logical place, it's a very emotionally charged place. It's going to be far more important that we close above 3680 or even 3700 today, that we complete some sort of minor low pattern going into the weekend. That is far more important. So yesterday was one piece of a sort of a three-piece pattern that I wait for, 3 candle. And what's more key is that we close above either 3680 or ideally 3700 on the S&P futures. All right, next up, Philip asks, looking at yesterday's performance of the S&P and the overnight ES, what are my thoughts for today? Philip, I have the same thought every day. Try to take over the world. I'm kidding. Y'all ever see Pinky and the Brain? I used to love that show. I have the same thought I have every morning. Philip, wake up. I look at the levels that I would gauge for sentiment. Then I'm going to day trade for the first hour of the morning, as we do 5 days a week in the Sector Secrets Mastery, as you know. And then I'm going to ask myself sometime in the afternoon, especially when we start wandering into Ask Me Anything Fridays, is there anything that I need to adjust in my longer term portfolio, meaning daily time frame, maybe weekly? And where are we heading into the close? And so this morning, I'm going to be open to shorts or longs because I'm a day trader. And my concern, if you want to phrase it that way, to understand sentiment is as much about, do I have a setup at an HPMR resistance support level? What's the structure of the market? Those are going to be my questions. So first thing in the morning, I want to be mentally as neutral as possible. It's a little early to take the gauge, but it probably will hold. If I take a look at the 5-minute S&P, I'm inheriting an uptrend this morning. As long as the structure remains bullish, I'm going to continue to buy. It will be by the dip. It could be a V-score dip, a volume-based support level. It could be a volatility-based support level. Heck, it could be a surf the wave, meaning my 34 EMA wave. But the decisions I make will be based on the structure of the time frame that I'm going to trade. So thank you for that question. I appreciate that, Philip. Mr. Walker, how are you? XLK for a long call. January. Oh, okay. Way out there. Okay. This is more maybe a daily, maybe a weekly conversation. So, all my cards on the table, we've built along in XLK. 200 weekly propulsion. You can see the white dots there. Wick came way back, but it was low enough to fill my limit orders to buy the actual shares. This is for my portfolio. Remember that trading shares and trading options on a stock, so stock shares and options on the stock, the trigger for me personally is identical. If I'm going to buy a derivative of something, which is what an option is, right? Especially a depreciating asset, I should be as willing to want to own the shares at that moment in time as I am wanting to buy the call option or wanting to sell the put option. The timing is all the same for me, whether it's shares, long call, or some sort of spread. And I'm in. So whatever that speaks, Mr. Walker, I'm in. Hey there, Rachel D. The UK are about to announce a new chancellor in 30 minutes and a U-turn on their disastrous, that fiscal policy that the chancellor of whatever, right? And that was actually not even the Bank of England. That was the chancellor of Crash. I guess that's what he would be known as now. Would the announcement affect the open? My opinion, Rachel, has always been this. You and I, my friend, we're talking about it right now. I'm always going to assume in the chain of news, I'm always going to assume I'm the last. And it's always served me well to assume I'm the last one to know, not presume I'm the first one to know. So my thought is, if I'm thinking about it, talking about it, it's priced in. So maybe a little bit of a reaction if there's some level of surprise to the actions that are going to be taken or something. But I would presume once I'm thinking about it, once I'm aware of it, I'm going to presume it's priced in. So my simple answer is not too much because we already know. And futures, the S&P futures get to react, right? They're already open. We're already seeing a group of traders in the ES, YM, NQ, 6B, 6E, dollar index. That market's open and they can already react. So I'm going to presume strength in the pound, seeing a moderate amount of that. Strength in equities. I don't think we're going to see a completely different psychology at 9:30. So that's the way I look at that. Sama asks, can I show you all the 5 ES and the 5-minute chart? Sure. And the green and purple arrows come from the Darvis. Yes. So this is the daily. And here's the 5-minute. So the green and purple arrows come from the Darvis 3.0. That would be correct. So there's Darvis 2.0 that we have been giving away freely since 2016. And that's been available to anyone who wants it. It's simpler, modernized, dare I even say, improved view of Nicholas Darvis's original work. It's really not Darvis anymore, but I love to pay homage to people who have influenced me as a trader. So it just tickles me that, I read these books as a very, very young trader, and then we were able to, I think, modernize a lot of his very valuable work, Darvis 2.0, Darvis 3.0. And yes, that is where it comes from. And then the other arrows, and I'm pretty sure that you're talking about the Darvis arrows, right? The arrows at the bottom of my screen are the V-score arrows. So thank you for that. Risky business. Does anyone know what the year average implied volatility is for the SPY? I don't know, risky business, but I don't know if somebody might know. I don't have that off the top of my head for sure, but what I'll look at is I'll look at the implied volatility through the sort of viewpoint of daily price movement range. Are we behaving in a way that's respecting the typical point range per session? If we're moving beyond that consistently, then I know volatility is on the upper end. If not, we're staying within the 68% probability, which is what my PMRs, both hourly price movement ranges and daily price movement ranges, study. All right, next up, can we take a look at Coke? Yeah, absolutely. Al, this has been on the watch list. This XLP, XLU are absolutely on my longer term watch list. And staples have been holding very well. And I do like the idea of Coke, but it's a little bit more the weekly. So I am looking at Coke, and really interesting is to look at the weekly chart to 2019. Look at where the 200 propulsion, which is not just the 200 EMA, but the 8 exponential moving average and the 200 exponential moving average and price. So there's a few more parts to confirm whether those lights turn on or off. But look at how the point of control, the most volume that has occurred in Coke since 2019, and that 200 are lining up. Coincidence? I think not. And it is a neutral market trend, and it is a staple. Now, there's a defensive quality to that. All right, next up is, what do I think about the Bank of England intervening and the tax cut? I really am not thinking much about it, to be quite frank. I do not have a lot of exposure to the pound. What little exposure I've had has been far before this, months ago, quite frankly. And that's been to the downside because the trend is down. I think what is worthy of discussion, what has happened, is not since late August have we been in a little bit more of a neutral trend, but I would still be a bear. I would still be a seller of the pound. Yeah, I would still consider the downside. All right, James asked, James, I don't even know what I'm going to have for dinner tonight. I don't know what to expect regarding anything, but do you expect to see a SPY 350 double bottom? I don't know. This is partly, where it gets difficult. Again, this is a good place to sort of wrap up our conversation. And I want to remind everybody, I don't know if we're going to have a 350 double bottom. And it's not even the double bottom in price that I'm looking at. It's a double bottom in volume, gang, that I'm looking at. The double bottom and the support in volume is what got me long and got me telling everyone to get long in July. I'm starting to see a similar pattern now. And both of those were happening in downtrends, while probably the largest, most vocal sentiment was whatever hyperbole of a low, which arguably some of those lows have probably been hit. But as I've said, if anyone had a 350 target, good for them. They finally got it. But what's really unusual, and this is what I always find interesting that's omitted from the conversation is, oh, well, if the 350 target was being called around 400, or maybe even before that, maybe 450 or 440, cool. What did they do through the 80-point bounce before we got to the new lows, right? The path to a target is not always a clean one. And if that path is unsustainable, it's no longer a trend. So that's why I say I don't know. Will we double bottom? I'm going to look for volume, my friend. That's a great question. I'm going to look for volume. And if I double bottom in volume, I'm in really good shape. I'm in really good shape. All right, gang. As always, thank you for being here for Charts and Coffee. I appreciate the time. I appreciate the questions. My sector secrets, folks. I will see you in the room in just a moment. All right. See you on Sunday for the 6 p.m. Raghee report. Enjoy your weekend, and just be aware of those levels I mentioned on the S&P. Can we close above 3680 on ES, or even better, 3700? That will set the tone for Sunday and possibly Monday. All right, gang. Until then,